You need to leave. Here we go. Here we go. Here we go. So nobody, so Ma, you said you took some calls, some spy calls. So nobody else really kind of traded the futures last week. All right. Okay. Oh, okay. So this is what we got, bro. What's up, bro? Good morning. All right. So look, this is what we got. This is the weekly chart, right? So let's I'm let's, let's get some context clues here, right? So uh started to sell off here, right? This was in July, it started selling off, sold off, rebounding. No, no. Go find something safe to do, brother. Safe to do? Yeah, go find something safe to do. Like eat breakfast or something. Come in here asking me for my stuff. Come on, man. I'm on Zoom, bro. Go find something safe to do. All right, so this is before I got distracted. My bad. So started to sell off July, boom, rebounded here, right? Created this gap. We traded beneath the gap, closed beneath the gap. That was surprising to me. But then this candle immediately came and reclaimed this bullish gap right here. So the market started trading higher, right? So fast forward to last week, or the not last week, but the last 3 or 4 weeks, right? So sold off, rebounded. We rebounded, kind of sold off again with this candle, then we rebounded again. So the market, they're just telling me the market is not ready to sell yet. So if you look at these two candles up here, this green one and this red one, right? If you look at that, you could call that a breaker block, a mitigation block, whatever you want to call it. But it's kind of a support level to say the least, right? So if you look at the candles, the wicks are trading through it, but the body's closing above it, right? So it's telling you in the breadcrumbs that it's giving you that it wants to trade high. So last week when I was saying that we should rebound, I mean we should retrace. I was speaking of us retracing back into this daily gap that's in discount, but it ain't happening, and it's showing you that it ain't trying to do that. So when whatever the market is showing me, I gotta believe it. So that's why I started saying last week, buy you some calls in Nasdaq stocks going into the end of the year because the market gonna rally. It's going to rally. So with that being said, the only obstacle that we have that's really being kind of like a nuisance is this this gap. It's a daily gap, and it's also a weekly gap. We haven't closed above it just yet from a weekly perspective, but I'm expecting us to trade higher going into the week. We don't have any big news events next week, so I don't think until like maybe the end of the week, Thursday and Friday, I think unemployment claims or something like that. But I don't think we have much news going into the week as far as the U.S. stock market is concerned. I know the Canadian dollar got some stuff, and like Europe got some red folders and stuff, but it's really not high impactful news for us. So with that being said, the market probably it's highly likely that the market could consolidate next week. To be honest with you, you might not get much of a big move next week. Uh, I'm hoping we don't trade inside of this candle. This doji that we created last week, I'm hoping that we don't create a range inside of this candle. But we'll see going into the week. But Overall, my bias is now bullish. I wanted us to retrace back here so I could get in at a good price to take it all the way up, but the market does what it wants to do, and you just got to follow suit, right? So this is the weekly chart, right? So let's go down to the daily. Boom, boom, boom. So the daily, it's pretty much the same story. This is the daily gap. We didn't quite feel it with this candle. We almost filled it, but maybe like 2 or 3 ticks away, we didn't feel it. So kind of like still consolidating here. We respected this daily order block right here, this red candle. We respected it, traded to it again, and respected it again. So it's like, okay, so let's just get to it. Let's break this down a little bit more. So what we have here is a lot of different things that happen, right? So here we got like I spoke of earlier, this order block that was respected. So when I saw this order block being respected, that was last week. I was like, okay, so we could kind of like trade through the order block because we already pulled the liquidity from it, right? But we respected it again with this candle. So with that being said, you also had a daily. See these 2 green candles right here, and we closed beneath it. You got your daily change in the state of delivery. So we went from bullish delivery to bearish delivery. And as you can see with this candle, we respected it, right? So we traded to it, we kind of traded through it, and then still closed beneath it. So to me, I was like, okay, that could be a sign of bearishness. So I was just like, okay, so this is one of the reasons why I didn't trade on Friday, is because I didn't know the certainty of the market, the direction of the market, right? So it was like we traded into this change in the state of delivery real deep, and then we closed beneath it. So that's kind of like a bearish signal to me. But I was like, you know what? It's Friday, Freaky Friday. You never know what's going to happen on a Friday. So the next candle opened up here, came down, traded down a little bit, and then traded higher. So, and then closed above the change in the state of delivery. So now that's why I'm leaning towards the market going higher as opposed to it going lower. Even though I know we have all this liquidity beneath us, I believe that we're in line for a Santa rally going into the holiday season, going into November and December. That the market should give us a nice rally, especially after or before the November election. So the market, if you're looking at the breadcrumbs, the market is telling you what it wants to do. It's telling you, right? So even though so if you look at it from this perspective, okay, you can say, okay, well, this is a consolidation right here, right? We closed above the consolidation, came back and tested consolidation and trade higher. We came back down and tested the consolidation again and traded higher. So the market is not showing any willingness to trade to the downside. So
Right.
you have to trade what you see to the upside. So now going into the week, somebody say something?
Yeah.
What's up, bro?
I need 2 favors, and you can pick which one you want to do first.
What you got, bro?
I need the imbalance on the monthly marked out.
You can mark that on your chart, nigga. I mean,
Ugh. I just want to show the people something.
all right. Let me move this.
That's good too. I'm happy you did that. You do the which name on it you want. I got mine with what that is, the Y. I marked it with the Y.
All right. So
The top of the red candle, the wick. Yeah,
this
do the whole wick. Yeah, the whole wick. Just the whole wick of that candle. Down. Yeah. Closed inside it, right?
mhm.
Now go to your weekly. Then you could just erase all of it after. Just the weekend? Okay, right there. That bottom green, go extension.
This one?
Yeah, the wick, and put your extension on it, the fib extension.
Let's do it. Make me do stuff
My
I
bad,
have.
bro. I said too bad, bro.
Hold up,
Oh
brother.
Lord, here we go
Yeah, you always ask me to do this crazy stuff, bro.
at the bottom, top of that run, and then the pullback.
So you want to start here?
No, green, go to the top of that run that it did off of that one. Yeah, there, that green, yeah, top of that one. And then you pull back the red wick. All right,
What's this, brother?
that's the extension. So same thing. If we close outside of that gap, you're probably gonna take that 76.40. And then your extension at 100 is your all-time high.
Uh-huh.
Am I tripping? I'm not reading it right. You see, it broke 61.80. That's the level that you was just talking about.
Uh-huh.
It's holding.
Uh-huh.
Now it's getting stopped by 76.40. We break that, which will be closure above the gap you were speaking on.
Mm-hmm.
Especially the weekly. Like that blue you got is the daily. If you marked out that weekly right now, that's the
Mm-hmm.
top of the gap, the 76.40.
Mm-hmm.
And then,
It is. Indeed.
yeah, and then get closure above that next week, you know we going for sure. So just something. I'm just backing up what you were saying that I what I had seen. Take it off.
Okay.
Could throw it away.
It's a good observation. I'm not I'm not one of those
That's
fear
why I asked. It
person.
was a favor. Go ahead.
Yeah, bro.
You
That's
on
cool.
mute.
So look. So going down to so going down to the 4 hour time frame, right? 4 hour time frame still is it still has bullish order flow. Um what happened on the 4 hour is we had this 4 hour gap, filled it, and retraced it. So this 4 hour gap is null and void anymore. So you could say, okay, well, we traded to this 4 hour order block and sold off. All right, you can say that too. But then with that, you had a 4 hour gap too that it created trading to that 4 hour order block. So basically what happened Friday, Thursday and Friday was the market was just playing a little ping pong between order blocks. So it was order block here, he had a 4 hour gap here. The 4 hour gap got respected. The wicks did some damage, but the bodies, look where the bodies closed inside of the gap, right? So just look reading the room, looking at the breadcrumbs that the market is leaving you. The market is telling you that okay, we not willing to sell right now, right? So we obviously the market is trying to trade higher, right? But it's not doing it in a speedy fashion as of yet. It's just like, okay, I'm showing y'all some stuff for y'all to get prepared to what we about to do, right? So just get prepared for the higher prices. So we got these people out the way. We hit this order block, boom. We traded into this gap. We pulled that liquidity out of this gap. So obviously your next price target on the 4 hour is what? This swing high, right? If you want to trade that. All in all, even if you find a trade to take going into the week, going into Monday, let's say Monday give you a nice setup to take, your price to the upside, your price target is going to be this going to be your first price target, right? And then of course higher prices going into the week. But with that being said, expect some form of consolidation or manipulation going into the week. But the 4 hour is telling you what it wants to do. You get this out the way, hit the order block, right? You trade it back down to the gap we created right here. You could call this another mitigation block here. It's respected. It's like all these PD arrays. This is in a discount on the 4 hour range. is being respected. The bullish PD array is being respected, right? So you got a closure above your last bearish run to the downside. You got a close above it, a closure above it. Next candle traded into it, closed above it. So these are the breadcrumbs that you got to pay attention to. Now, this is hindsight. You know, market close. We're not getting no new information. This is on all the information from last week and previous weeks and days, so forth and so on. But just looking at what we got today is telling us we trying to go to the upside. We're trying to go to the upside. And it might not be like a immediate move to the upside. It might be a grind to the upside this week because we don't have many market movers as far as news goes this week, but it might be a little grind to the upside at first, but eventually it's gonna get to moving. So, and let's go down to the 1 hour right quick. 1 hour telling you the same story. 1 hour playing ping pong too, right? So we didn't quite fill this 1 hour gap, but you had a 1 hour change in the state of delivery right here, right? 1 hour, you have 1, 2, 3, 4, 5 bullish candles, green up close candles. You got this one dookie dropper right here, closed beneath this. This is a change in the state of delivery. So that the delivery of the market went from bullish to bearish. We trade back to the change in the state of delivery, you get a nice response off of that. Trade lower, boom, right? So context clues. Change in the state of delivery takes you down to what? This 1 hour gap that's in discount, right? Even traded down to the one that's beneath it, traded down to that one. But the wicks do the damage and the bodies tell the story. So even with this, we traded down to this gap beneath us and closed above it, and we closed it back inside of this gap. So when you see this, when you see this type of manipulation, oh boy, here we go. When you see this type of manipulation, right? You see a candle that opens up and immediately drops, right? Now this is a 1 hour candle. So when you 10 minutes into this candle and it's just red and it's dropping and you look to the left and you see where it could be going, but okay, you got an order block here, or you got a fair value gap that could use it as support, whatever, right? So you see that, and then you'll see a dookie dropper, and then the last 30, 40 minutes of this candle, it trades higher, right back into the range. So when you see that, what do you expect? Higher prices, right? The same thing we went over last week. When you see these kind of candles, they have a lot of momentum as soon as they open, and then they trade right back into the range, you could expect higher prices. Vice versa, if you see that from the upside, a green candle with a lot of aggression to the upside, and then it trades right back into the range, you can expect lower prices. So when you see this, you see you got your range, got your 1 hour range. Hold on, let me draw it out. Excuse me. Let me draw it out for y'all, mind. So go across the board here. Right? So you have your 1 hour range, high to low, right? You got your gaps, you got your bullish PD array and discount. 23, 38% is discount, right? You have your change in the state of delivery. That's in premium. So what you doing premium?
Sell.
You sell a premium. So you sell at a high price, you buy at a low price, right? So when the range is established, you know what you're doing. What we don't do, I'm gonna say this again for the people in the back of the class that's playing pencil crack back there. I see y'all putting the pencils up. So look, what we don't do is diddle in the middle. right? So if you have a range set, you want to buy the discount, you want to sell the premium. Anything in the 50 percentile of the range, you won't mess with that. We don't we don't mess with that. We don't mess with that. So right now, let's just say the market was open right now and the market was trading back and forth in this range, the 50%, right? We ain't doing nothing with that. Nothing. Nothing. Go find something safe to do. Go read a book, Dr. Seuss, Cat in the Hat, whatever. But in the middle of the range, we ain't playing around with that. But when we in discount, you can look to get long. When we in premium, you can look to get short. So you had a premium PD array, 1 hour change in the state of delivery, right? It's a good trade. So, but it's all in context, right? So if you're looking to take this trade, and if you're willing to sit in the trade for if you have high conviction on your trade, where would you take this trade to? What would be your price target, right? So you'd be looking to find either a PD array that's in discount or swing low or swing high, probably on a smaller time frame outside of the 1 hour to find your exit to get out of the trade. But experience tells you if we selling if we selling a premium, we got to go down to the discount. Now, here's how you know that the market will go to discount when you sell a premium PD array, or you have a reason to trade at the top of the range. This is how you know that the market is going to find a way to go down to the discount and or the swing lows that are beneath the market. See, when you have a range set and you have your range drawn out on your chart, when you hit a premium PD array and you close beneath the 50%, expect it to go lower. But if we use the 50% as support and we kind of plan around the 50%, get out of that trade, because that means that that means one or two things. It means that the market is not ready to sell, or there's no PD array or liquidity we're going to get that's beneath us, right? So when you close beneath the 50%, you can say, okay, well, we closed beneath the 50% level. And then even with this candle, you can look at it. Okay, so we checked off the 50%. We closed beneath it on this candle, tested it, and kept selling. So when we tested it and kept selling, you looking like, okay, from a 1 hour perspective, you're looking to see where can the market be going, right? So you're like, okay, well, we got these gaps that's beneath us, right? And then you can say, well, we got this we got this mitigation block here, or this breaker block, whatever you want to call it, down here, that's inside of this gap. You can be like, okay, well, this is gonna be my price target, getting out of this trade. It's like, so it's so many different perspectives you could take while trading. You just got to know what you're looking for, right? So this, just from this conversation that we're having about the price action that was last week, you could kind of see like everything that we've been talking about over the past few months coming to fruition, as far as selling premium, buying discount, right? So you buy a discount, you got to have a reason to buy on a smaller time frame, of course. You can't just be like, all right, unless you don't care. You're like, I'm just buying. I trade the 1 hour. I don't use no smaller time frames. Okay, cool. If you just trade the 1 hour and the 1 hour is your thing, that's fine. For me, I got to trade a smaller time frame to get a better entry than just looking at it from the 1 hour perspective. The 1 hour is just like confirmation to my trade on the smaller time frame. But the discount, you got a PD array and discount, you had PD array and I mean, I'm sorry, in premium, you had a PD array and discount. See, and these, to me, this is like the easiest way to trade. When you have a range that's set, you have a reason to sell in premium, you got a reason to buy in discount. So you know what you're doing. You're like, all right, well, I'm selling to the discount. You sell to the discount, but all right, do I want to buy this? Do I want to buy this discount? You be like, no, you know what? I made enough money for the week. Well, I made enough money for today. I'm out the way. But it's just knowing what to look for as far as trading goes, bro, because it's plenty of times like we got on Zooms and I tried to explain to y'all about like selling the premium. whether it's a 1 hour premium, whether it's a 4 hour premium, whether it's daily premium, whatever the case is, you want to sell at, right? And let me go back to the daily right quick just to see something. So let me spread it out right quick. Pause. Move this. So like even from a daily perspective, right? So if we let me just draw the range on here right quick so you can see. All right. So let's go a little deeper right quick. So move this line too. So here's a gotcha. This is now the daily is a higher time frame than the 1 hour, of course, right? So what the daily is telling me is this. All right, you have your all-time high up here, right? You have the bottom of your daily range right here. So your discount is here, right? So in that discount, the discount was bought up, right? We've been in premium for let's say about 4 weeks. No, yeah, about 4 weeks we've been in premium. Just trading in premium, right? Consolidating in premium. So in my humble opinion, and I could be wrong, but when you consolidate inside of a premium and when you do try to sell, there's no follow through, that you know what that means, right? Higher prices. So you just have to be patient and wait for, honestly, you want a closure, you want this gap to get inverted. Once this gap is inverted, that's it. Murder she wrote is off to the races to the upside from a daily perspective. So that's why I was telling y'all to buy some calls on the NASDAQ or whatever NASDAQ stock that you like, buy you some calls with December expiration because the market is going to rally. Now, there's contrast. So what I'm saying in the daily range and the 1 hour range. The 1 hour range is not as strong as the daily range. You know, the 1 hour range trades inside of the daily, gives you trades to take for that day in particular, you know, whatever the case is. But the daily tells you from like, even from like a weekly perspective, what it's trying to do. You know what I'm saying? So even here, closure above this mitigation block, use it as support. The wicks did a little damage, but the body's closed above it. 3 weeks ago, 2 weeks ago, or well, 4 weeks ago, 2 weeks ago, last week, closed above it. There's no willingness to sell. The market is not showing you any willingness to sell. So with that being said, higher prices, right? So going into the week, um, let's go back down to the lower time frame, back to the 1 hour. So going into the week, you could expect the market to kind of trade inside of this range, um, this 1 hour range that it created, right? Because damn, this is good price action, to be honest with you. Not that I'm looking at it, but uh, see this consolidation that we started doing towards the end of the day and Thursday. That's just a telltale sign that the market is, you know, preparing for a big move in either direction, and I'm assuming it's going to be up. So even from a 1 hour perspective, you're looking for an inversion, a 1 hour inversion, closure above this gap, right? So if we close above this gap, even if we close above this candle, this red candle, that red candle now becomes an order block. So you get that closure. You could trade this to the upside. You could trade the top of the gap to the upside. You could trade if you feeling, you know, if you feel like the market is gonna come back into the gap, you know, it's all in context. But once we close above this gap and use it as support, you know, we alter the races to the upside. So you should be looking for trades to the upside. right? So, this is actually good price action. I like that. We swept this low, reversed, created a gap here, traded into that gap. I like that. It's nice. The market just wasn't, the market really wasn't willing to give you anything. It wasn't willing to sell off like I thought it would, and it wasn't really ready to like run to the upside. So still kind of playing a little ping pong, which is cool. That's cool. But with that being said, man, uh that Mike personally, I did take a few trades last week. It wasn't a lot to write home about last week. Uh Monday, I think Monday was I think this was Monday. I'm not sure. I think yeah, this was Monday. I think Monday gave us some nice price action going to the downside. I thought we was gonna get some continuation a little lower, but that's just telling me that the market's not ready to sell. So we're gonna consolidate a little longer before we start running. Because if we wanted to sell, we could have followed through and got some of this sell side out the way, got these lows out the way. So it's a reason why the market is not attacking to the downside and it keeps rebounding and staying inside of the range. So yeah, yeah, upside. So from a 5 minute perspective, it's like I so Friday, I'm gonna say this. Friday wasn't a good day to trade. If you look at this price action on a 5 minute, it's not this yeah, you better off watching paint dry. But see, Thursday had gave you some nice price action. And y'all remember what I said, right? So I'm gonna draw this out. So from about 6 to about 10 o'clock in the morning, this is the best time to trade, right? Because you're coming out of the London kill zone. The New York volume is coming in the market about 7:30, right? Especially if you don't have any news. The New York volume is coming into the market. You get some nice price action coming out of um, the New York Open at 8:30 and going into the 9 o'clock um the 9 o'clock candle closure. So the reason why the 9 o'clock candle closure is so important in the market is because any time frame that you trade and on whatever, whether you trade a 5 minute, the 15 second, the 1 minute, whatever, at 9 o'clock, all candles close at the same time. Meaning so the 1 hour, 5 minute, 15 second, 1 minute, 1 second, whatever, at 9 o'clock, they all close at the same time. The 4 hour, from the 4 hour on down. That's why that time is so important in the market. That's why people be like, that 9 o'clock candle closure is important because now you get an idea of what the market wants to do and how you can trade it. So with that being said, to me, unless you have, like I said, like a few weeks ago, unless you got news in the afternoon, like FOMC or something like that, this is your best trading opportunity right here because the afternoon sessions don't always they I mean if you like to watch paint dry on the wall, then that's your forte. But between 6 a.m. and 10 p.m. and 10 a.m. I'm sorry, you get some nice price action. You don't believe me? I'll show it to you again. You got it. I draw the lines again, no problem. 6. Get out the way. And then 10 o'clock. So get your price action. That's that's it. You go, and this was perfect for me. Like Wednesday, that was some nice price action. See, this is what I like to see. Like when you have your London kill zone between 1 and 4 a.m. and you consolidate coming out of London, right? I like to see consolidation coming out of London on the 5 minute because that's just telling me, okay, the first move, the first move out of London gonna be a nice move. And you got a nice move out of London. So, and then, your 8:30 open, you know what I'm saying? Even here, this is nice price action. I like this. This is good price action. But like I said, between 6 and 10 in the morning. Now, you got some nice price action that afternoon, but it's like, what am I like? What's my trade? Like, is it? This is paint drying right here. Going into a close, that's just paint drying. So you had a nice move to the upside with this candle, these three candles. You had a nice move to the upside, but it just kind of just drip, 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 drop for the rest of the day. So that's why the afternoon sessions be real iffy for me, bro. Like if I don't catch my morning, like I get to the market about 6. Most times I get to the market like 6 o'clock or a little bit before 6 o'clock, and I'm just looking to see what we did in London. We didn't do much of nothing in London. Then we consolidated coming out of London. See, when we do this, when I see this consolidation coming out of London kill zone, I get happy because I know we're gonna get a nice move in New York, and we always get that nice move in New York right here. So you just got to know what you're looking for, what you're trying to trade, what's your bias, what the market is telling you from a higher time frame perspective. So it's all about it's all about like trading what you see, but also knowing what's going on like the higher time frame, what's going on the 1 hour, what's going on the 4 hour, like what's the next draw liquidity on the 1 hour. So then if you have a good idea of what the market is trying to do, you can get into your trade, whether you trade the 15 second, like some people, 1 minute, you get in your 1 minute trade, you're like, all right, I'm taking to the low, boom. So your price target would have been this swing low right here. Did the market did the market smash that swing low? Indeed it did. So it's like you gotta, once you know what you're looking for, the market is always going to show you where it's trying to go. Right? So we got liquidity below these swing lows. Market took that out, it reversed. Market took that out, reversed, left you a gap to trade, traded into that gap, right? The wicks did the damage, but the bodies tell you in the story. We're respecting this gap, respected the gap, traded higher, and eventually took out this high. But you had to sit in that trade for at least 2-3 hours. And I'm not, I'm more so of a 15-minute type of trader. I want to trade the volatility when the volume comes in the market, especially on the NASDAQ. You catch one contract, get you 60 points, you be out the way quick on the NASDAQ. When I say quick, I mean quick. So, but I just want to bring this to your attention, man. Between 6 and 10, to me, that's your best time to trade. To me. Now you could have some continuation after 10 o'clock, but if you just go on your chart and just back test, let's go to the smaller time frames, whether it's a 1 minute or the 5 minute or the 10 minute, whatever time frame that you use, and look at the time between 6 a.m. to 10 a.m. and look at that price action, and then look at the price action for the rest of the day. You're gonna start seeing like a trend. You're gonna start seeing a trend because what I've learned about the market is the move happens in the morning. And sometimes if you have a trend day, so a trend day meaning that the market is trading in one direction all day, it's just running. Now we don't have those days a lot, but when we have those days, then you could kind of like throw this out the window. But like on days when we trade in a range and we have a swing high and a swing low and we set in the range, between 6 and 10 is gonna be your best time to trade. Because the afternoon sessions, they kind of like preparing or getting in position for the next day or the next per se trade. So 6 a.m., 10 a.m., back tested, you know, back tested and go see if what I'm saying is legit, or if what I'm saying is not correct. But it's another one. 6 a.m. to 10, right here. your price at. This is what you be look. These are the candles that you want to trade. You don't want to trade this. Stuff like this, that's not what you want to trade. You want to know what you're looking for and trade it. This is New York. I'm sorry, this is London kill zone right here. We consolidated in London. We came out of London consolidating. We manipulated to the upside. All right, we're gonna drop. See, this is the stuff I'd be looking for. Going into like the 8:30 open. Like I'd be looking for that. Like some people be like, man, I don't trade the opens. I'd be like, bro, if we don't have news I'm trading the open because if my trade presents itself before the market opens, the market just gonna when the market opens at 8:30, it's just gonna be a continuation of what I'm already in. So between 6 and 10, best time to trade. Because look what happens after 10 o'clock. Look at this. You watching paint dry, bro. Like this is like you could trade this. You could scalp. If you're a scalper, you could scalp this and get $200 here, $200 there, and really have to sit at the computer all day and pull your hair out your head. But and I'm not trying to put no pressure on you to say you got to trade between 6 and 10, but this is like the best time frame to catch those volatile moves, and you could be in a trade and out of trade and been and made $750 and be all right, cool, I'm done. I see y'all tomorrow. Close the computer. Once you hit your profit, close the computer. It don't matter what the market does after that. I don't care if the market goes to the moon. Don't do it. Don't press no buttons. Don't get back in that market, man. Compound interest, baby. Just let them wins keep compounding. Don't get back in the market and say, this is about to happen. Oh, I'm about to, yeah. And press the button, and your $750 go from 750 to 350, and then you be like, man, I gotta get my $400 back. And then you try to get the $400 back, and then you go from 350 to negative 125, and then now you won't fight everybody in the house. And you won't fight the mailman, you won't fight energy, you won't fight everybody.
Say that again, Sensei, because the student just walked in the class. I don't think they heard what you said.
Shut up.
All right. So when you have your profit, when you hit your profit target for the day, let me say this. The market does not owe you anything. So if you hit your profit target, let's just say you on a daily basis, you want to make between $250. No, I'm gonna say $500 to $750. Let's just say you make $600. So you're gonna stay in the market and try to hustle another 150, or you're gonna be like, you know what? Let me close my computer. Let me go find something safe to do. Because if you don't respect the market and don't respect like how the market trades, the market is gonna take everything from you. So if you get into a trade, if a trade presents itself that meets your criteria, and let's just say you make $1,000 on that trade, why are you still in the market? What like why are you still in the market? What you trying to do? You want to make 5,000 a day? Come on, let's be sensible. So then you get back in the market, and then let's say another setup presents itself that you would take, right? But you already made your $1,000. So now you're gonna take this trade, right? And then it stop you out. So it stop you out, you lose $350. So you go from up 1,000 to up 650. So like, damn, I need to get my $350 back, right? So you get back in the market, you take another trade. So you go from up 650 to down 275. So you went from up 1,000 to down $1,200. All because you didn't want to close the computer. All because you thought that you think the market is I used to think the market was a casino. Like I'm like, man, I'm about to hit the jackpot today. But what I realized is
Thought your little partner.
what you said?
Thought the market was your little partner, huh?
Yeah, bro. I tried, and then once you realize that you have to take calculated risk in the market and only trade your setups and not trade every setup that you see, but just trade the setups that you're comfortable with. So once you get used to that, I'm telling you, like once you start getting used to trading a certain way, the casino feeling and the euphoria you feel from having a winning trade and all that, it goes away. because now it's just about data to you. It's about, this is my trade setup. I'm taking it. If I get stopped out, I'm gonna lose 250. If it hit my price target, I'm gonna make 1,000. And you're gonna start approaching the market like that. And when you lose, you're not gonna be upset about a loss because your wins will always outweigh your losses if you stay disciplined. So I'll be willing to take a $250 loss to make $1,000. So either I'm gonna make 1,000 or I'm gonna lose 250. But I'm not gonna be in the market, keep continuously pressing the button, and my 250 loss go from 250 to $800, and now I'm like, that's 4 days worth of losses. So now I gotta play catch up. You don't ever put yourself in a position where you gotta play catch up, especially trading futures. Like when you trade the options give you a little bit more leeway, especially if you buy time and you're able to just, be patient in your trade. For instance, if you enter your trade a couple of days too early, you bought time, so the trade eventually is gonna go your way. When you trade in futures, you gotta be right when you're right. And when you're wrong, you gotta recognize when you're wrong and accept it, take your loss, and move out the way. Because taking losses is a part of the game. I know it's hard to walk away from the computer with a red P&L. I know it is, but I'd rather have a small loss, $250, 100, whatever the loss is. I'd rather have a small loss like that than to walk away from the computer being like, damn, I gotta buy another combine. I blew it quick. So just be mindful, man. Just be mindful that these trading the futures market is very lucrative, but it can also be the gift and the curse, because you could come to the market thinking that, man, I'm gonna make $1,000 a day. I'm gonna make $3,000 a day, and you trade with too much leverage, or you trade when you like, man, I'm getting in my trade with no stop loss. I do that. Don't be like me. Like, I trade with no stop loss. Sometimes, not all the time. Sometimes I do that. Now I need to work on that. I'm just being transparent. But sometimes I don't trade with a stop loss, especially if I know what the market doing and I'm in the trade and I got a good entry. I'm like, man, look, pay me. But that's still not a good habit to have, because the market could swing on you within a blink of an eye and take your whole account from you. So but that's just me being transparent. Like, sometimes I do not trade a stop loss. Now, sometimes when the trade is going in my favor, like super, super, super in my favor, then I'll put my stop loss at a certain dollar amount. Be like, all right, I won't let you run, but I won't, this is as much as I'm willing to take from this trade if you do reverse. So with that being said, don't be like me, right? Trade with your stop loss every time. Riding your car, every time you get in the car, put your seatbelt on. Put your seatbelt on, bro. Don't trade your stop loss. Protect yourself at all times. But like I said, man, this price action Friday was nothing really to write home about. And you could tell. So like, I learned this from ICT. Like, so when it's like low probability conditions like this, you could tell by, like, when the market opens at 8:30 to like that first hour or the first half hour, when there's the lack of fair value gaps in any direction, it's gonna be low probability conditions. It's just gonna be ping pong all day. And you could trade this, but you're gonna lose a lot of mental capital trying to trade this, because you're gonna think that, okay, we got a gap, I should sell this gap, and then you sell it and then it trade lower, then it close above the gap. It's just like, it's no follow through in any PD array, and it's a small range that we trading in. It just wasn't good price action Friday. So this is something that it comes with experience and being able to tell, and not being so obligated with feeling like you got to trade every day. So when you see stuff like this, you be like, all right, I'm cool. I'll be back tomorrow, or I'll be back Monday. You know what I'm saying? So it just comes with experience. You got to be able to see those type of things. And like I told y'all last week, I said, man, on Friday, I don't trade good on Fridays. I don't know if it's like trauma, or if it's like a mental thing on Fridays. So what I've learned to do on Fridays, if I'm going to trade Fridays, I'm gonna trade my sim account on Friday. And if the trade go off, it just go off. But if I lose that trade, then I lose that trade. But I'm learning to, like, especially if I have a good week, like Friday, I'd be like, man, I might have to take Friday off because it's something about Friday just don't sit right with me for whatever reason. Unless we got, like, now if we have non-phone payroll on Fridays, then that's different. But just me being transparent. Like Fridays, I don't trade well on Fridays. I don't know why. Um, so this Friday I kind of set out and I didn't trade, and I was like, when I came back to the computer, like about 11, 12 o'clock, I looked at the price action. I was like, yeah, I'm glad I didn't trade this, because you could get cooked in this consolidation. You'd be like, all right, I'm selling. Then you sell it, and then it revert. It's just nothing to trade. It's no clear price action to trade. I mean, unless you probably could find something on a smaller time frame, like the 1 minute or something like that to trade. But for me personally,
Yes, sir.
it's just it ain't nothing to trade from a 5 minute perspective, right? And then from the 1 hour perspective, you could kind of look at the price action and see, is this the wick man was out. The wick man, was just taking souls. So we didn't really miss nothing on Friday. So going into the week though, I do expect us to go higher. But let's take a, a, a peek at the ES right quick, because I know this. So yeah, brother. Yeah, brother. So this the field extension on the ES, the daily. Yep. Close above the see. We can even on the extension. This is a premium, right? So you're supposed to sell premium. We consolidate in premium. See, when you consolidate in premium, that just tells me one thing: rocket ship, a rocket ship, and vice versa. If you consolidating in discount instead of going higher, consolidating a dookie drop. But we in premium of the extension. Expect a rally going into the end of the year, bro. I'm telling you, get y'all some positions, man. Especially and you're gonna be able to see it when we go to the hood and look at the stocks and whatnot. Like especially NASDAQ stocks, tech stocks. You're gonna be like, oh yeah, 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 yeah. Let me get along. And then just buy you some out the money calls, man. Buy you some whatever. Amazon, Tesla, whatever. But Google, whatnots, and what have yous. But we could go, let's break down the ES right quick. I don't spend no time over here no more. None. None. So yeah. So okay. So look, this is what I like about this 4 hour. So you had this bearish gap right here, traded into it. So but we had a gap beneath us. So when we traded into this gap, we created a gap down here in discount. We bought that gap, closed above this gap. Use this gap to take out the high with this candle, trade it back into this gap, right? This is now, these are the context clues, right? So we traded back into this gap and we respected it. Now the wicks did some damage, but the body's telling you the story. The body's telling you, hey, look, we love you, we respect you. We're gonna stay above. So on the ES is more telling. The ES ready to go. The ES ready to run. I ain't gonna hold you. I'm not gonna hold you. But this from a 4 hour perspective, this the price action that we got the last few days or so. So we had this gap, close beneath that gap, boom. Even here, use that gap as resistance. Now, this is how you could know that the market is not ready to sell, right? So you have a 4-hour gap. You inverted that gap, closed beneath it. We use the bottom of the gap as resistance, right? But where did it take us to? Nowhere. So with no follow through, when you have a bearish reason or you have a reason to sell and the market doesn't give you no follow through and it just reverses, the market is telling you what it's trying to do. It's telling you what it's trying to do. Because this would have been a nice continuation because you got your bearishness, 4-hour gap, close beneath this 4-hour gap, use the bottom of that gap as the inversion as resistance. You should have some follow through to the downside, right? But you get none. You get none. So the market reverses. While it reverses, it trades into this gap, also creating a gap beneath us. Market trades into that gap, goes higher. The market is telling you what it's trying to do. It's showing you. These are the context clues. Boom. Close above this gap. Use it as the consequent encroachment of this gap to go higher, to take out the high. Boom. But still in all, we traded lower. You could call this an order block if you want to. Trade it to that order block. The wicks did the damage, but the body's telling you the story. The bodies are staying inside of the gap. The bodies are staying inside of the gap. Even though we wicked beneath the gap, the bodies closed inside of the gap. Higher prices. Came, took this high out right here, closed as a doji. So the ES is kind of telling you the same thing that the NASDAQ is telling you. Higher prices. Higher prices. Let's go to the 1 hour. And then we could go to the hood. Yeah. All right. Okay. Same thing. Let me squeeze the chart a little bit more, get some information, more information. This is the low, swept that low, consolidated. Traded higher. Didn't give you opportunity to enter on a 1 hour time frame. Maybe on a smaller time frame it did. See, yeah. So see how even looking at these candles, right? See how they small? And they just, it's like a slow drip drop to the downside. Like, see stuff like that. When there's no follow through to the downside, the market is telling you that we plan on running to the upside. So even this was a nice trade. Swept this high. See this swing high right here? We swept it with this candle reversed, right? So now this green candle becomes an order block. Trade to the order block. Take out the low of this candle. That was a good trade. That would have been a good trade on the ES. But the ES is still telling you no follow through. It did the same thing as the NASDAQ, traded into the gap, this lower gap, traded right back into the range. And I'm telling y'all, every time y'all see something like this, especially on a red candle like this, where it's like no wick at the top of it, it just opened up and started dropping. And then as it closes, it's trading higher and higher and higher right back into the range. When you see that, every time you see that, expect the market to continue to the upside. So even if you enter this trade on a smaller time frame, you take it, you know where you're taking it to. You're taking it to either this swing high right here, or you're taking it to this 1 hour gap. Market trades into that 1 hour gap. That's your price target to get out, because you don't know if they're going to use this gap to go lower. But every time you see a candle like this, with no kind of like a very small wick at the top, but it's a red body candle, and it trades lower, and then it closes right back in the range, expect higher prices. Each time, expect higher prices. expect higher prices. Expect higher prices each time you see that. Same thing. You see this candle? Opened up. It's very, very small wick at the top. Opened up, dropped, traded right back into the range. Look what it did. Higher prices each time. Each time, boom. You see this? Opened up, dropped, traded right back into the range. Expect higher prices. Expect higher prices. Expect higher prices. Each time you see that. Oh,
We
He
kick
dropped
what?
off.
Yeah, they got quiet.
What happened?
I think he dropped out. Uh, so everybody got the NASDAQ? There you go. There you go.
Yes, sir.
Yo, yo.
yeah, man.
You pushed the wrong button.
No, my computer just cut off. I think you know what I think happened. I think the powers that be don't want me to give y'all this information. So my computer had just cut off for whatever reason.
I know who
So
did
I
it.
don't know who listening to me.
I know who did it. But
So
I'm not
the
gonna.
power the powers that be don't let me give y'all this good information.
Yeah.
I
Start
don't
with
know,
a
bro. I
L.
don't know. I'm talking to my.
Start with a L.
Hey, bro. Hey, not today.
Hear
Not today, man. So look, I'm not going to entertain Winston because I know where
My
he going
internet
with it. But
unstable right
look,
now.
so
It's all bad, bro. Go ahead. You
so
need to shut a screen again, or you want me to go to the hood?
yeah.
Which one?
This is a rinky dink Zoom. You can share. You can make me the host.
All right, hold
All right. People just cut off. He was like, man, this dude giving up so much information. Bro. These, these people gonna be making money in this market that ain't giving out too much information. So yeah. So back to the ES. The ES the same way. I believe that the ES kind of look honestly, the ES look better than the NASDAQ from a 1 hour perspective. But it's still bullish order flow. Because you got your order block here, traded to that order block, even inside of this gap. You got your order block here, order block versus respected, traded higher. Now this candle becomes an order block, market traded to that, respected it, traded higher. So the bullish PD arrays are being respected. If you can see that. So yeah, yeah, it's time to get into some long positions, especially if you train options. But let me see. Any questions about anything that we went over today on the NASDAQ or the ES before we?
Nah, I appreciate it, Sensei. That's attached.
All right, cool. So with that being said, man, um, see, bro, I remember these 3 days right here. I remember this. I remember this. I remember this. The market reversed. And I was looking at these two candles like, man, this is some nasty work right here. Nasty work. And then the market just said, all right, we're gonna trade, close above this volume imbalance, use it as support, boom, boom, close above this volume imbalance, use it as support, boom. Kept going. Traded back down, kept going. Yeah, market about to keep going, man. So let's go to the hood, man. Winston, you got the hood, or your internet not working?
I got you.
Let's go.
It's gonna be quick,
You
bro.
good?
Yeah, it's gonna be a quick one.
All right.
Mm.
Man.
Nah. Runner. Runner. Y'all can see my screen? No? Yeah.
Not yet.
It's low.
What? No? Still low?
There we go.
Right?
That boy was looking at AutoZone.
Oh, they've been delayed like a motherfucker. I ain't even know that. Let me know when to click over the spine. What the hell?